Hi, this is Zach with a look at some ftse 100 stocks, starting off with BT, where it's noticeable that we've got this unfilled gap to the downside just below £4.60, and that's pushing the shares down here. Obviously, the trend here has been a very strong one. We had a sort of golden cross type buy signal in December, which worked quite well. But this gap is gaps such as the one we're seeing at the moment can be negative or very negative sometimes, and especially when we've had this gap to the upside as well. So we've got a sort of notional island top with this strange configuration here as well in February. There's a couple of days where there was a gap higher as well. Probably the best way forward here is to look for a decline towards the 50-day moving average of £4.28. That's probably the highest you want to be buying the shares at this point. The stop loss on the buy argument 410, which is the floor of the September price channel. At this stage, only really back an end of day close back above 460 would sort of cancel out the negative scenario there. Another stock which is looking a little bit weak at the moment is Glaxo. Decent run, obviously, here from December, January, from 13.50, so £2 on the share price, nothing to be sniffed at. View at the moment is that at least while we're below the 20-day moving average, 15.43, we're looking at a negative setup here. Initial downside perhaps 14.87 at the 50-day moving average. And probably the ideal scenario here is actually that the shares come back down to the 200-day moving average at 14.67, at which point we would have a sort of a relatively comfortable place to go long. Normally, when you've had this overshoot of the 200-day averages we've had here, it will come in as support, and then the shares or the market in question would rise again. Finishing off with Tesco in this little batch situation here, similar sort of in a way to Glaxo, that we've had an overshoot of the 200-day moving average, falling feature down to £2.26. That's likely to be the place where the support comes in. And after this sort of topping out through £2.45, £2.50, in fact, that level came from, that's a gap fill failure of the August gap to the downside. So quite a serious or relatively serious technical sort of sell signal there. So 200-day moving average at the moment, the earliest place you'd be thinking or feel comfortable in going long.